If you submit a UK tax return, you need to be aware of payments on account. If you're not prepared for payments on account, then you can have a very nasty shock to your bank balance. Hi folks, my name is Mahmood, and for over 26 years I've been helping businesses navigate the hurly-burly world of numbers, improving their profitability, saving tax, saving time, and improving the attitude to money in their business. In this presentation, I'm going to be focusing on payments on account, particularly what they are, how payments on account are calculated, what you can do to reduce the payments on account that you may have, when those payments on account have to be made with some dates, and I'm going to be using our friends Rishi and Boris to help illustrate some of those numbers and time frame. I'm also at the end going to be sharing a link with you on resources, some calculators that will help you do some of the heavy lifting of the number crunching. Let's move on with the broadcast. Now, payment on account, first of all, represents and is equal to a payment you're making upfront in advance of your following year's tax bill. It's paid on top of any tax that you might be owing. Typically, it will be triggered when you owe more than £1,000 in tax. The headline, that payment on account is paid in 2 equal instalments. Now let's bring on our friends Rishi first of all. Now Rishi, just to give you some background, Rishi's left a well-paid job. He started his business as a tax advisor, and he set his business up in July 2020. Now, as a consequence of Rishi starting his self-employed business in 2020, he's registered for self-assessment. His first tax return he will be completing will be for 2021 tax year. In time-wise, because it's his first year of self-employment, he will need to submit his tax return by latest 31st of January 2022. Any tax that he owes will also be payable by midnight 31st of January 2022. And in addition, if he has more than £1,000 worth of tax owing, he will make his first instalment, his first payment on account, on the 31st of January, and another one on the 31st of July. Now let's think about Rishi. Now Rishi, he's had a successful first year, and he crunches his numbers, and based on his profits in his business, he owes HMRC £4,000 worth of tax. That £4,000 worth of tax, by the way, is made up of the tax on his profits plus the national insurance that's due. That's £4,000 he's got to find. Now on top of that, because Rishi owes more than £1,000, automatically payments on account will kick in. And his payments on account in total will be another £4,000 on top. But he will pay that extra £4,000 in 2 instalments. Instalment number 1 will be paid midnight 31st of January, so that's the first £2,000. And the next instalment will be due on the 31st of July 2022. So in terms of his money that he needs to find, he's got to find £6,000 in total by midnight January 2022 to pay the tax that he owes plus his first instalment. 31st of July 22 onwards, he needs to find another £2,000 to pay his next instalment. Job done. Now, Rishi's scratching his head thinking, my gosh, that's quite a lot of tax, and there could be a number of reasons, okay, why that tax bill has arisen. Now remember what we said, you can elect to reduce those payments on account. And here's what needs to happen. The automatic assumption is that as soon as you've got £1,000 that you owe in tax, then automatically the payment on account will trigger. However, our friends at HMRC say, have a look forward, and if you anticipate that your tax bill next year will be lower, then you can make a claim to reduce your payments on account accordingly. So if for any reason profits are going to be less, if for any reason that you've got more allowances coming through and you think your tax will be smaller, by all means reduce your payments on account. Now Rishi does a bit of forecasting, and he reckons if anything else his business is going to be an upward curve. He's a bit cautious and he doesn't want to reduce his payments on account. Be aware, by the way, that if you do reduce your payments on account and it turns out to be incorrect, HMRC will say we want some interest on the underpayment, and potentially, if you're taking the Michael, we want a payment penalty surcharge as well. Now let's bring on our friend Boris. Now Boris his business. He is a writer, he's an author, a presenter on Greek history, Greek literature and all things Greek. Now, Boris has been in business for several years now. So he would have already filed tax returns previously, and he's sitting down and he's working out his tax return for 2021. Now, ironically and coincidentally, Boris's tax bill turns also out to be £4,000. Now, because he is already in self-assessment, because he's already in the tax system, from last year, from his 1920 tax return, he has already been making payments on account. Let's say, for argument's sake, that our friend Boris, his payments on account from last year were £800 each. He would have made his first instalment from that in January 2021. His next instalment will be July 21. So in total, he's contributed £1,600 towards his 2021 tax bill. So when Boris gets his calculator, looks at his bank balances, looks at how much money he's got to save, he knows that he's got to find £4,000 to pay his tax bill, of which he's already contributed 1,600 quid. So that's a mere 2,400. He's then got a payment on account to make of another £2,000. So in total for Boris, because he's already been making some payments on account, what he's got to find by midnight, 31st of January 2022, is not the same as his friend Rishi, because he's already been making some payments on account. Now, Boris can do the same thing. If he thinks that the request and the demand for speaking on Greek or matters Greek is going to be less, he can reduce his payments on account. Boris decides to play it safe and keeps that at the same. So we've got two situations here. One, somebody who's a newly starter, that will be a bit of a shock to the system. You can explore the options of reducing the payments on account. If you get it wrong though, remember there will be interest due on the underpayment, and if HMRC think you're doing it deliberately, there's no good grounds, then you can be surcharged by way of penalty. Now, a couple of things to share here, folks. Obviously, it makes sense that as you go along, if you're self-employed, if you've got a rental property that you are generating profits from, if you are a director-shareholder of a company, you will have income that's not being taxed at source. So it's a good idea to budget and save money for your tax bill. If you want to think about how do I work out what those payments on account actually are, well, you've got two choices. Either speak to your accountant or advisor, get your tax return in early, by the way, it's always recommended, or hop on to my website, look on the resources section, and there's a suite of calculators which will help you in terms of calculating the tax bill, calculating the payments on account, and that will give you a degree of comfort. I hope you found this video useful. If you did, I'd love it if you could subscribe to the channel. Keep in touch with more videos that can be given into your inbox on a weekly basis. Any comments, any feedback, gladly share them with me. Until next week, folks, have a good week.